Okay, let's talk about your bank accounts. For most of us, they're just places to put money, right? A digital wallet. But what if I told you that for the pros, they're not storage boxes at all? They're a toolkit, and every single account has a very specific, very powerful job to do. It's time to start thinking like an architect, not just a saver. And this quote, this is the entire game in a nutshell. It's about shifting your mindset. The amateur is looking for a small gain. The professional is looking to protect the entire system. It's all about asking the right questions. And that's exactly what's going to transform your financial strategy. All right, first things first, let's lay the foundation. We're going to start with the two most essential tools in your domestic toolkit. These are the accounts that really form the bedrock of finance for almost everyone living in India.
The good old savings account. We've all got one, and its job is simple. It's your liquidity tool. It's for the cash you need to get through the month. But here's the classic mistake so many people make. They leave way too much money just sitting there. With interest rates around 3 or 4% and inflation often higher, that money is actually losing purchasing power every single day. And that brings us to our very first pro move.
You gotta meet the auto sweep feature. Seriously, this thing is a game changer. You just tell your bank, hey, any money above this specific amount, automatically sweep it into a fixed deposit where it can earn more. But, and this is the best part, when you need that cash, the bank just sweeps it right back. It's the smartest, simplest way to make your idle money get to work without sacrificing any liquidity. So the next tool in the box is the business engine, the current account. Now, this account is built for a massive number of transactions, which is why you get zero interest. But what you get in return is way more valuable for a business, an overdraft facility. Think of it as a pre-approved credit line, a safety net that makes sure your important payments always go through, even if your cash flow gets a little tight. And right here, the mismatch becomes crystal clear, doesn't it? If you're a business using a savings account, you have no safety net, none. And if you're an individual using a current account, you're literally earning zero on your hard-earned money. Choosing the right tool isn't just a minor tweak, it's absolutely fundamental to your financial strategy. Okay, so we've covered the home turf. Now let's expand the map. Because for non-resident Indians, or NRIs, the whole game gets a lot more complex. The challenges are different, and you bet the tools are different too. For an NRI, the priorities completely flip. Suddenly, the interest rate isn't the most important thing anymore. The real goal? It's building a defensive wall. A wall against tax leaks and a wall against restrictions that stop you from moving your money where you want it when you want it. It's all about tax efficiency and the freedom to repatriate. Now, this matrix might look complicated, but it's your strategic guide. Let me break it down. Think of the NRE account as the one for your foreign income, the money you earn abroad and bring to India. It's tax-free, and you can take it back out anytime. Easy. Now, the NRO account is for your income from India, like rent from a property. That income is taxable, and there are restrictions on taking it out. But then, there's the FCNR. This is the specialist. It's like an NRE account, but you hold the money in its original currency, dollars, pounds, whatever. And why is that a big deal? Because it completely eliminates foreign exchange risk. If the rupee's value goes down, your dollar balance doesn't change one bit. The bank takes on all that risk. Okay, you ready to go even deeper? Let's peek behind the curtain and see how banks actually move billions of dollars across the globe for trade and investment. It's all about the plumbing of the financial system. First up, the Nostro account. It comes from the Latin word for hours. And it's really simple. This is our Indian bank's account with a bank in another country holding that country's currency. Just think of it like this. Our money held in their country. This is how an importer in India pays a supplier in the US. And the mirror image of that is the Vostro account, which comes from the Latin for yours. This time, it's a foreign bank's account held here with our Indian bank in rupees. So your money held in our country. This is what a company in New York would use to invest in the Indian stock market. But what happens when two banks don't have a direct relationship? How do they send money to each other? Well, that's where the LORO account comes in. It's Latin for theirs. Imagine Bank A needs to pay Bank B, but they don't know each other. But they both have an account with a big intermediary, Bank C. So Bank A just tells Bank C, hey, take money from our account with you and credit their account. It's the critical bridge that connects the entire global financial network together. All right, now for the really specialized gear. Beyond the standard accounts, we've got some high-performance tools that are designed for very specific, very important financial jobs. So let's run through these power tools real quick. First, the EEFC account. Let's say you're an exporter. You get paid in dollars, but you also have to buy supplies in dollars. This account lets you just hold on to those dollars, so you don't lose money converting them to rupees and then back again. Super useful. Second, the escrow account. This is basically a neutral trust account. If you're buying a house, for example, your money goes into escrow. It only gets released to the seller once every single condition of the deal is met. It protects everybody. And finally, the demat account. This one's simple. It's the digital vault where your stocks, bonds, and mutual funds are held. It's basically the backbone of all modern investing.
So, after looking at this whole toolkit, from the domestic basics all the way to the global plumbing, what's the big takeaway here? What does this all mean? Well, it means it's time to stop being a passive account holder and start being an active financial architect. At the end of the day, it all comes down to this one idea. Banking isn't about storage, it's about architecture. You wouldn't use a screwdriver to hammer in a nail, right? So why would you use a savings account to run a business or an NRO account for your foreign salary? Using the right tool for the right job is how you build a powerful, resilient financial foundation, one piece at a time. And that really leaves us with one final question for you to think about. After everything we've just covered, take an honest look at your own financial setup. Is it just a messy drawer of random accounts you've picked up over the years? Or is it a master blueprint designed with intention and purpose? The choice really is yours.